Bitcoin fixes this.
I said my cat.
I almost can't believe it. And so what is going to go wrong? Well, I'm going to go through all of this because
market cap,
$2 trillion is so big.
When did you get involved in Bitcoin?
we could go a long way until that. Now,
and force us to ask a tough question. Should we continue to cover Bitcoin?
I've been excited about the president's embrace of...
Something huge is unfolding behind the Bitcoin price chart, and it's not what most people are watching. Everyone talks about who's buying Bitcoin, but almost no one is asking the more revealing question, who's selling it? And that answer, buried in 12-year-old wallets and ETF flows, is what changes everything. So, Bitcoin's up just 3% this month, but institutions have poured in nearly $4 billion. Meanwhile, old whales, some from the 2013 Chinese mining era, are quietly selling into that demand. What's happening here isn't just supply and demand, it's a full-blown shift in ownership dynamics, and the clue has been hiding in plain sight for months: the flow that doesn't move the price. Let's start with what happened in June. According to ETF data, June saw positive inflows for 12 straight sessions, bringing the total to $4 billion for the month. That also puts Bitcoin ETFs on track for their 9th positive week out of the last 11. That's not retail speculation. That's major institutional demand.
Market cap, $2 trillion is so big.
When did you get involved in Bitcoin?
You know, I've not gotten involved with Bitcoin, and I wake up every day at 3 in the morning and I'm like, why am I such an idiot? What have I been waiting for, not being involved in it? And it just goes up and up.
Bitcoin ETFs, especially the spot ones, are proving to be among the strongest financial products in terms of consistent net inflows. And yet, what happened to the price? Just plus 3% growth for the month. In a market as volatile as Bitcoin, that's practically flat. So how can that be? Simple. For every dollar going in, a dollar's coming out. This is one of the most balanced tug-of-wars the Bitcoin market has ever seen. The silent sellers. Here come the OG whales. Using CryptoQuant data, analysts have identified that the wallets doing the selling are not new speculators. They're old, deep-pocketed holders' wallets from 2013, 2014, and earlier, mostly associated with Chinese miners and early adopters. These guys have held Bitcoin through multiple halving cycles, 1,000 headlines, and 2 bull-bear megacycles. And now, they're offloading. It's not panic selling, it's strategic distribution. These wallets aren't dumping, they're selling into strength, offloading their Bitcoin into institutional hands via ETFs. And the beauty of this moment is that it's almost perfectly neutralizing price impact, because while early whales are selling, ETF buyers and corporate treasuries are stepping in with almost equal force. It's a quiet, orderly transfer of wealth from the crypto old guard to today's titans of capital. Who's buying? The rise of institutional wallets. Now, look at the buying side. Wallets holding 1 to 1,000 BTC. The smaller whale wallets have been the biggest net buyers of 2024. These include ETFs, hedge funds, corporate balance sheets, and high net worth individuals. This year alone, this cohort has quietly accumulated massive Bitcoin positions. And here's why. The ETF structure made it easy. For the first time ever, institutional investors could press a button and buy Bitcoin in the same way they buy stocks and bonds. They don't have to touch keys, wallets, or blockchain addresses. They don't even need deep crypto expertise. Just custody services and regulatory clearance.
About who's buying Bitcoin, we do not talk as much about the sellers. So yesterday, to your point about the flows, Frank, was the 12th session in a row of positive inflows for Bitcoin ETFs. Flows are on pace for their 9th positive week in the last 11. It's almost $4 billion for the month of June. And all of that underscores the strength of institutional demand that we've been talking about all year.
And that ease of access is accelerating fast. One conversation that recently surfaced involved a sovereign wealth fund, yes, a government fund showing interest in buying through ETFs because it's faster and cleaner than buying direct. Supply side pressure. So we have buying, we have selling, and we have stable prices. That tells you one thing: the market is in perfect equilibrium for now. But equilibrium doesn't last in crypto, especially not with supply dropping. Exchange reserves. The amount of Bitcoin sitting on trading platforms are at record lows. This means less Bitcoin is available to trade, to sell, or to panic dump when headlines get rough. This is the invisible pressure building underneath the price. And when these institutional buyers run out of patient sellers to buy from, that equilibrium will snap. That's when you get price discovery. That's when the real upward momentum begins. The window for front-running institutions is closing. For years, some of Bitcoin's biggest bulls have said that the key opportunity isn't just to buy Bitcoin, it's to front-run the institutions. That opportunity is disappearing fast. When Bitcoin ETFs launched earlier in 2024, the price dipped. That was the classic sell the news move. But underneath, the real infrastructure was being laid. Asset managers don't just flip a switch and push Bitcoin to their clients. They wait, they evaluate, they want performance data, and that takes time. Fast forward 6 to 8 months. Now we're here. The ETFs have a track record. Clients are asking questions. Wealth advisors are starting to say, maybe just 1% of the portfolio. And once a few big names start allocating, the rest follow. Peer pressure works even in billion-dollar boardrooms. This is the part of the cycle where the buildup is invisible until it's not. Sovereign wealth, real estate, and Bitcoin as collateral. The level of institutional interest is broadening too. It's not just hedge funds anymore. Sovereign wealth funds' national-level investment arms are rumored to be preparing allocations. One source shared that a sovereign fund wanted to buy the ETF first simply to beat the US to it. And domestically, we're seeing Bitcoin integration into traditional finance in unprecedented ways. The U.S. Federal Housing Finance Agency has issued guidance to allow Bitcoin and crypto assets to be counted toward mortgage applications, but only if they're held on a regulated exchange like Coinbase. That's a huge shift. No, it's not perfect. You can't self-custody and still qualify. But it's movement, real movement. Bitcoin, once dismissed as internet money, can now help you qualify for a mortgage. And that's not the only policy signal. Policy and political tailwinds. Senator Marsha Blackburn recently announced that she's working to make Bitcoin ETFs available inside federal employee retirement plans, which manage $43 trillion in assets. That's not a joke. That's not clickbait. That's real policy being drafted with Bitcoin at the center. And on the regulatory side, even Fed Chair Jerome Powell has acknowledged that banks have the legal right to custody Bitcoin and crypto on behalf of their clients.
Bitcoin prices fluctuated a lot since its invention in 2009, but it recently hit a record high of 110,000 US dollars. It proves that Bitcoin is digital gold, and this is being recognized by more and more people. I believe it will chase up to gold prices in several years.
The old fear, the government will ban it, has flipped. Now the government wants a piece of the pie. It wants oversight, tax revenue, and eventually control. But that shift also signals legitimacy. Bitcoin is no longer fringe. It's becoming part of the financial establishment, slowly, reluctantly, but undeniably. The China paradox. No story illustrates Bitcoin's resilience like China. Back in 2021, China banned Bitcoin again. The price collapsed nearly 50%. The world declared Bitcoin dead for the 99th time. Fast forward to today, Bitcoin has surged from that level over 10 times. The miners pushed out by the ban, many of them are now the very whales selling into ETF demand. And ironically, China is quietly embracing blockchain infrastructure on the back end. It wants control. It wants CBDCs. But even there, Bitcoin's influence is felt. The message? Bitcoin doesn't care about bans. In the short term, yes, news hurts. But long term, it has absorbed more punches than any other asset in history and keeps coming back stronger. Valuation targets. You've probably heard wild predictions before. But when they come from a $110 billion asset manager, people listen. NYU's Mike Kai recently said he believes Bitcoin is headed to over $1 million per coin. His logic? Gold has a $22 trillion market cap. Bitcoin? Just $2.2 trillion today. If Bitcoin reaches gold's level, that's a 10x move. Why does that matter? Because this isn't Reddit. This is high finance, now adopting Bitcoin's base thesis: limited supply, growing demand, and an unstoppable adoption curve. And remember, Bitcoin's total supply is capped at 21 million. That's it. Final. Forever. The future of finance. Bitcoin isn't just about price action, it's part of a bigger shift. Robinhood CEO Vlad Tenev recently said that crypto could one day replace traditional finance altogether.
I do think that crypto itself, there's two ways to look at it. One is a tradable asset like options, futures, and equities. The other is as a fundamental underlying technology.
Right.
And in the second lens, it's the next stage in evolution. We've gone from, paper and pencil, filing cabinet based.
And that's not just speculation, it's already happening. Imagine a real estate project in Dubai. Instead of dealing with lawyers, escrow, and paperwork, you buy a token or an NFT. That token represents ownership in the project. It entitles you to dividends, paid out via smart contracts. These aren't just theories anymore. Tokenization of real-world assets equity, debt, real estate, art is gaining traction fast, and Bitcoin's success helps open that door. The psychology of accumulation. Right now, Bitcoin feels boring. No headlines, no price surges, just chop and sideways motion. It's almost designed to lull you to sleep. But historically, this is exactly what Bitcoin does before its next explosive move. It grinds, it gets quiet, people stop paying attention. Then one day, you check your phone and it's plus 30% overnight. That's when it enters what some call banana zone, a term for Bitcoin's parabolic price breakouts. That moment isn't here yet, but everything suggests it's coming. Whales are repositioning, institutions are loading, retail is asleep, and supply is tightening by the day. So what's the clue that's been hiding in plain sight? It's the change in ownership. Old whales from 2013 are passing the torch. Institutions are receiving it. Exchange reserves are drying up. And regulation is, for once, working with Bitcoin, not against it. For the first time in 12 years, the Bitcoin market isn't just a speculative frenzy, it's becoming structured, sophisticated, and strategic. And when that equilibrium finally breaks, don't say you didn't see it coming.